Bullish week for net gas. As we discussed in our last week's review, the double bottom and a breakout above 2.76, the key resistance levels. We can see net gas achieving highs at around $3 levels. It has gone close to 2.98 before closing the week at 2.82 levels. So now what to expect from natural gas next week, which position you should take in order to profit. We will see with the help of charts, followed with indicators, and towards the end, I will give you the summary of the observation along with trading levels and key strategy to watch out for. Watch till the end. Do like, share, subscribe, and comment. Your every like, comment, share is a great inspiration, motivation for me. Also, you can press the bell icon which keeps you updated with the twice a day analysis which I share for NetGuess, and you can also get updates by joining my free Telegram channel. The link is mentioned in the channel and video description. Now look at the weekly charts for oil. We can see consolidation going on here after this you can say sideways channel in which net gas is trying to. At the same time, in the long run, see the bottom levels here, and since then we can see gas trading in this bullish channel. The top of this channel is somewhere here at around 3.2 levels. If it continues its journey above $3 levels next week, $3 levels are going to remain critical for this week, and thus we have to wait and watch out for a breakout. So 3.05, yes, beyond that directly it will try to hit 3.2 levels. Remember, it is undergoing consolidation as of now. You can see these two candles pullback are seen, stronger pullbacks are seen. Yes, it has stayed above the resistance levels last week at 2.9 and traded bullish. So possibly next week again we can see it continuing with the upward momentum, and this week possibly we can see a stronger bullish candle. See, couple of greener candles, couple of reversal signs, and hence it has to give a breakout. I will possibly expect a breakout on the upside towards 3.05 and plus levels. At the same time, on the downside, we have discussed several times 2.6, 2.48 levels. As long as these levels are respected, we should not be treating net gas as bearish here. And it is always a buy the dips. So yes, I have been recommending buys on net gas since 2.06, 2.1 levels. It has almost achieved 33% returns, almost achieved 50% returns previously as well. Now it is bound to cross further highs. Now this is on the weekly charts. Let's have a look at the daily. Now look at the daily chart. See, higher lows are seen, higher highs are seen. This time it has fallen shy from the highs of this channel and has reversed. Remember, first red candle and then second red candle. Also, it has closed at the lower levels, which suggests there could be a third red candle which might take the prices towards 2.76, 2.74 levels, which are going to be a great support. And at that point, after consolidating at around 2.7 also, we can see a pullback in net gas. Remember, as we can see, it is clearly showing higher lows. So these levels at around 2.7276 are going to be critical for net gas in the coming few sessions. At the same time, a reversal here, a breakout about 2.9, you can buy again, expect it to break beyond 3.0 to 05 zone, and then it will directly lend towards 3.2 levels. This is the target which I will be looking forward to on the upside. So yes, this is a larger zone, broader zone, and remember, it can scale up in couple or more sessions. Maybe it can retrace on the downside towards 2.7276. In fact, 2.6 levels, 2.65 levels also cannot be denied, but even if you see a drop towards 2.6, you can initiate a buy entry there. It is tend to bounce back, it is bound to bounce back. So this is another observation on the daily charts. Now let's have a look at the month. See, half the month has passed by. Look at the preceding two candles, double bottom levels. That is very important. So this candle is bound to remain in, and also you can note this candle has yielded higher lows, which suggest higher highs. So towards the end of the month, we can look forward to a bright green candle taking it till towards 3.2 levels. Yes, it's only half the month has passed by. Still there are multiple trading sessions left. So you should be watchful and careful here. Yes, on the sell side, I will not recommend you to stay short as long as 2.6 levels are respected. In fact, 2.48 is another milestone. So as long as 2.48 is respected, I will recommend every dip is an opportunity to buy. So this candle I expect to remain in green. In fact, I expect a rather bigger green candle which should take it towards 3.2 levels at least. And remember, there is lot much of upside still left on net gas in the coming few months. Yes, net gas has seen a sharper reversal here. It has achieved higher lows. Now it is bound to rise in the near future. That is my expectation, but these are markets. It can reverse as well. It can give a stronger breakout on the downside as well, but below 2, I don't think so that it is going to stay here. So now this is on the charts. Let's have a look with the help of indicators on the monthly chart, see moving averages are on the verge of a crossover. This is a bearish cross. And see, this is the last time when on the monthly charts, net gas has seen a bearish cross. This is after 15 years, we can see the bearish cross happening in net gas. This is something we should be careful. At the same time, one should watch out for that the prices are too much divergent from the moving averages. Thus, the prices are bound to converge, which suggests that we may see 3.8, 4 and 4.4 levels in the near future, and it can happen in couple of months or so as well. Yes, it is bound to retrace. However, the crossover here is a bearish sign, and hence even if it tries to retrace, there could be a possibility of reversal. Now look at stochastic. This is seen a good rise right now, staying flat. But MACD, if you look at MACD, is trying to converge. It is was trading with a fat belly. It is trying to converge here and crossover for a buying entry. Now this crossover is also happening at a lower levels here. So possibly from here on the monthly charts, the bullish momentum may prevail. RSI is flat, which is not indicative of anything. It can try to show an exponential rise. Now look at the weekly. On the weekly charts, 20 weeks average giving it a support at around 2.76, 2.78 levels, and this is a good support level as of now. Also look at the top of the Bollinger Bands at around $3 levels, going to give it a good pressure on the top, but it may try to breach past this. Look at the extreme divergence between the 20 and 50. This also calls for a possible conversion, which suggests beyond 3.2 we can look forward to 3.5 and $4 levels in the near future. Stochastic has started to look upward. This is a bullish sign. Look at MACD, but on the MACD side, you can see the drop was sharper. The rise is gradual, and this is something which is making me cautious. Right now, it is still staying bullish, but the convergence here is something which one should note, because see, if it crosses over from here, it has stayed in green for long. If it crosses over from here, it can lead to another round of bearish wave. RSI rising, and on the now look closely on the daily chart. See, moving averages are looking upwards. 50 and 100 period also has crossed over, and it is showing some bullish signs. At the same time, the prices were too much divergent from the moving average. This is why we can see a little conversion. Now, even if it tries to converge, it can try to stabilize somewhere here at 2.76, 2.7 zone before looking forward to an extreme up. Yes, it is still staying bullish. It can breach on the downside. However, now the moving averages have crossed over the 50 and 100 specifically. So possibly before breaching past these levels itself, it can reverse. Thus, for the next week, you have to focus on 2.76 and 2.7 zone, which is going to prove out very strong support. And from there again, it may continue its upward journey. Now, yes, higher highs, higher lows are seen on the daily chart. So this is something you should note. And thus 2.7 is going to remain a very strong support. Stochastic was overbought. It is trying to cool down a bit, and that is why I say possibly couple of candles. Next couple of candles, we can see slight bearishness. It can try to achieve lows before looking forward to an up move. Now look at MACD. MACD was trading with extreme divergence. It has started to converge. See, candle size has started to diminish. It can possibly diminish a bit before rising strongly. Yes, it is trading very near to zero levels, and the breakout is going to give a stronger bullish momentum. RSI looking downwards, trying to stay. So now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategies so that you can trade profitably next week. And yes, I will be also sharing my complete observation for this analysis in couple of minutes. And before we proceed, if you want to learn this art of trading, you should join my mentorship batch. The 26th batch is going to start on first week of October. Limited seats are available purely on the first come first serve basis. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my Signals channel. Reach out to me for more details. Now, let's have a look at the buying position here. See, I will recommend you to buy at 2.83. Now, remember why I am saying so. 2.83 was a good resistance here. 2.83, if you are buying, remember 1.2.86, 2.9. Now it has to break past 2.9 levels in order to confirm the further bullish momentum here. This is going to be a very good resistance, in fact 2.92 as well. Now if it stays above 2.9, 2.92 zone, we can look forward for it to break past $3 levels and then 3.05 levels. This is the next milestone which it needs to break past by. If gas stays above 3.05, we can directly look forward to 3.2 levels. Yes, and beyond 3.2, it is 3.5. Now, these levels 3.2, 3.5 are applicable for the complete month of September, and in fact for the next month as well, as we are looking forward to these levels in a quick succession. Now, on the downside, where to sell? Now, as we have discussed for first couple of days, possibly we may see a little retracement on the downside. That is why I say you can sell here at 2.8, but then 2.76, very, very good support. 2.72, extremely good support, and then 2.7. It is only below 2.7 is where the bears will try to take over here. You have to be careful as long as these levels are respected. Below 2.7, one can expect further drop, and then 2.68, 2.65 and 2.62 will come into picture. Below 6.2, 2.62 is where the bears will take over. As long as 2.62 is expected, I will still expect it to stay bullish. In fact, 2.48, this is also one of the milestones. So I do not see net gas anyways breaking below 2.6, 2.65 zone in the coming week. Yes, this could retrace. However, 2.7 should be a good support, plus minus few cents or points. Yes, it can reverse completely from those levels, and hence you can take your positions accordingly. Trade with the stop loss, trade with the trailing stop loss. Do like, share, subscribe, and comment. Join my mentorship batch and signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Do watch the twice a day analysis for gas. Definitely, it will add meaning to your day trading decisions. Thank you.